Hello, everybody.
Good
Hello.
morning, Ted.
Hey, welcome.
Good morning, everyone.
Yeah, good morning. We got. I was gonna play some Rocky music and Eye of the Tiger, and I was looking behind the scene, and I was like, is it okay to play copyrighted music? I know, it would have been awesome if I could, but yeah. Anyway, welcome.
How's it
We've
going?
we've got a. Let me see. Oh, the tracker's here too. Let me see if I can. Yeah. Welcome, everybody. So I just wanted to introduce one of the special guests here, Roy Crossroads. You there?
Yeah, can you hear me?
Yeah, I can hear you perfectly. Yeah, so um, it's been a while. I think I've talked to you before too, maybe like a few weeks ago, a month or two ago. I was trying to get you to come on too. And I'm glad that you're here. I know that you've had a lot of communication with a lot of us about a lot of things, but we just haven't actually had a chance to actually speak. So welcome.
Thanks. Yeah, it's going to be fun. I appreciate the invite.
Yeah, Garcia, what do you think about that?
Uh, well, I would like to temper. I would like to, curb everyone's expectations. We've been hyping it up as a huge, debate of the ages, but it's really just going to be us talking about our investment theses, and just, we're, I'm going to hear him out, and we're just going to, discuss, the two different companies. But it's not going to be like this mean spirited, debate or. Me going to be shouting down, his ideas. So
Roy,
No
he's just
promises
called.
on my end. Just kidding. No. Yeah, Garcia and I, we have mutual respect. And, like the honest truth is he's basically 100% in Palantir. Palantir is by far my number one holding. So if you put all the other companies I hold individually combined, they're still not as big as Palantir. So we are in agreement on that. But where we disagree, well, that's probably fintech in general, but PayPal in particular. So it's going to be fun to talk about.
Mhm.
I mean, yeah, Garcia did call your stuff investment feces, so I think that's pretty mean. But anyway, no, I'm just kidding.
Well, I didn't want to say theses, So is
No,
it theses?
I'm gonna let Roy to kind of introduce yourself, because I think you're new to our spaces. We have a bunch of guys here. We're mad. We have freedom. Freedom's also new. We'll get to you. Don't worry. I hope you're able to stick around for like an hour or two. But we have Tracker. We have Red Fox, who's Seth. So we got a bunch of folks here. We generally do this on regular at like 9 a.m. Eastern on Saturday. So Roy, you're welcome back anytime, man. But I just want
Mhm.
to kind of let you introduce yourself, kind of let you talk a little bit about what your investment journey is. How did you to become like this like whole influential influencer thing? How do you go on like different YouTube shows and things like that? So go for it.
Yeah, made a lot of mistakes, so that's the honest truth. But that's part of the investment journey is you'll make mistakes, you'll learn, and then I do what I do. Not because of the awesome like $30 or $50 or whatever payout on X, and I'm not on I'm on YouTube as a guest. So, but it's just if I can help somebody out to avoid some of the mistakes that I've made, that's a good thing. But yeah, where I'm coming from is basically my dad taught me about investing, but that was more index fund style investing from when I was about 13 or so. And the two times that I tried to do personal investing in the past was basically, and I'm older, so I'm 44, but was right around the .com bubble. I was a new adult, and I was like, "Hey, this is a great thing." And no, I didn't lose much, but I just was like, "Yeah, I don't get this. This is not something I have time for," because I was in college. And then later in during the great financial crisis. So it's like, all right, those were probably not the most opportune times. So, just largely have been for most of my life, just putting in broad-based funds and everything. COVID was a little bit different. So all of a sudden I had no commute anymore and got to pull back from a lot of other commitments. And my wife had encouraged me for a while, to dig into stocks and investing. And that was a good time, for a lot of us. I think a lot of us maybe started around that time or a little bit before. And I just started reading as much as I could, researching as much as I could. investing in a few companies that were absolute garbage, but they worked because everything was going up at that point and it was a bull market. And during that time, I was really thinking about, okay, I don't think we're going to have this crazy bull market forever. I need to invest in companies that I think are quality, but have a lot of room for growth. And so Palantir was the first one on that list. And I decided at that point I would just start DCAing and add aggressively, especially as it began to fall in the bear market. And I just saw it as a once in a generation type company. And so that was once I had got that position where I wanted it to be, and it was about 90% of my portfolio near the lows of the company. So that shows you the level of my conviction. Some might call it stupidity. That's fair enough. But I've diversified some. I still have a concentrated portfolio. I like to just follow and track a few different names. And if the thesis changes, I get out. But, it's mostly Palantir, PayPal and SoFi and Robinhood. I'm in those as well. Of course, Robinhood's doing great. Tesla, I've been adding to very aggressively since the beginning of this year. I think it's poised to run. I love that company. And some Bitcoin miners. Basically, that's it. Just clean and simple. And yeah.
Yeah, you're at the right place. I mean, I do want to ask about because Garcia, you've always had this question, and I'm gonna call on you. You've always had this
Uh-huh.
question about if you're gonna ride a bull cycle, you kind of want to focus on what the major narrative is, right? So currently,
Hmm.
the narrative is AI, and I think that's what got you into Palantir, and you're pretty much all in. I mean, you play around with like a little bit of money here and there, but you're pretty much
Hmm.
all in, right? Yeah, go ahead and talk about that.
Yeah, I mean that's the whole main idea behind my, I guess, investment idea is okay. I kind of like to follow the path of like Peter Lynch when he talks about, concentration is pretty much like the best asset we have as individual investors. Like him, he was limited, by regulations to not concentrate up to a certain percentage. Like Kathy Wood, if she could, she would be all in Zoom stock or Peloton or whatever she was in. But us as individual investors, we have that ability to be 50, 60, 100% in a stock if we believe in it. And that's going to be, at least the way I can see it, is the most uh I don't know, I guess like the one of the better ways to compound, the money that I'm investing without going into stock, only options, or doing these crazy YOLO bets on a weekly call option. And yeah, so as far as it being the general AI wave, I'm trying to avoid companies that I feel are going to be stuck in competition. With Palantir, every company that they're competing with, quote unquote, it's not really competition. They're on paper they are, but I mean they're winning these bids that are just single. Only one company was offered the spot, and it was Palantir. With fintech, I feel like because there is competition, it is going to be difficult for any one company to stay ahead for so long before other companies start, cutting back on prices or starting to develop other ways to take profit share, margins and profit margins from these companies. So because of that, that's why I'm avoiding, like fintech, or, reading the book Zero to One, avoiding companies that are going to be stuck in competition, competing their profits away. So, that's just been my whole way of approaching it. So, and then when I just look at the entire history of these companies, I mean, I just have seen a lot of shareholder, value destruction, on PayPal. But I think that's where we will kind of like get into like my whole, just I'm just looking at it from 2015 to today. It's just not been a great company to invest in, but a lot of people are starting to put their money into PayPal now, which is of course much better timing than had they started buying in 2019, 2020. um so yeah.
Yeah. So thank you for sharing that, Garcia. Roy, I'm going to get back to you. He Garcia is raising some points in terms of fintech. There's a lot of competition. Sure, it may not be the the narrative of the cycle, sure. But I'm also personally invested in like Robinhood. I have SoFi also. I'm thinking about PayPal, and also I have a position in Firm as well, which you probably won't like as much. But I just want to kind of hear from you, like, from the diversification standpoint, and try to convince Garcia, if you will, but not, that you don't have to. But kind of wondering about your investment theses in terms of the fintech space. Like why are you diversifying into that as opposed to other things, and like what would you like to kind of, maybe specifically about PayPal and also the other stocks to go for it.
Yeah, so there are cycles and there are seasons. So back in, and I just to take it one step back, I largely agree with Garcia that if you can find a company or a few companies, I don't think there's many of them that have just a substantial moat and where it's very difficult for competition to catch up. Like you want to be in that, especially at a good valuation. The thing with Palantir, I'm not selling it, but its valuation is a bit stretched right now. It's over 100 to 1 price to free cash flow, for instance. But again, I'm not selling. I see where it's going in the future. I think that what they do has a substantial lead. I had this post back in March 2nd, 2023. I think Palantir may have just broken into double digits, may have just been a little bit under, but I had said that, this is that Palantir had a good chance of going to 40 in 2 years, which at the time seemed utterly ridiculous. I normally don't make claims like that, but I was very confident because I was seeing this wave. And honestly, I probably should have done a Garcia at that point and been 100% in Palantir at that valuation. Right now, again, I've not sold any Palantir stock. I did have some leaps that I sold, but I plan to just make that a core holding. Now, as far as PayPal, so Garcia is right. Fintech tends to be more agile, and so what that means is when you come out with a really great product, then like Robinhood often does, they lead the way here. And that's one of the reasons why I think that they're doing very well this year for yourself and for me. But when you come out with a great product, other fintechs see that and they're like, "Oh man, we want a piece of that action too." And so they're able to innovate pretty rapidly and push out those products. And there is fierce competition in the space, no doubt. PayPal, the thing with PayPal is, so we have Palantir on one hand, that phenomenal company. And again, I'm not selling it. And if I didn't have any, I would still be buying it right here. It's such a large percentage. But their valuation is stretched. But on the other hand, PayPal is basically trading for almost no growth at all for eternity. And the reality is, I think that within the next 2 or 3 quarters, they'll be looking at, and actually it could even be next quarter with the way that the dollar's reacting, in double digits as far as revenue growth. Free cash flow has actually never been better. And as far as innovation, so Garcia had this critique, which I think was 95% accurate on PayPal, but it was past looking. It was looking at former management under Dan Schulman. He was looking at the slowing revenue growth. It was looking at the lack of innovation, the lack of integration, the lack of rollouts. He didn't go into details, but that was fair criticism. Basically, the previous CEO of PayPal was like Steve Ballmer from Microsoft, that there was some good things that he began, but he could just never really execute. And so despite very brisk competition, PayPal still grew. And if you look at not the stock, but the actual company, like it's still been growing all this time. Growth is reaccelerating. We see active accounts beginning to reaccelerate. And under Alex Chriss, there's a lot of operational efficiency. So they've grown EPS substantially. And on top of that, they're actually using their one and only moat. Now, what is that? That's their data. They have access to 400 million active users plus 35 million merchants. So, network of 435 million globally. And so they have double-sided data. A lot of payment processors will have data from the consumer or from the merchant. And so for years, they have all this data and they do a little bit of fraud protection, but not too much with it. Alex Chriss comes in and he's like, "Hey, why don't we actually use our core strength, our data?" And so they're using it for selling other value-added services like fraud protection to DoorDash. They're rolling out this guest checkout, which my estimation is it's best in class. There's a massive TAM in that. Stripe, has a decent product. Shopify, ShopPay is actually pretty good there. They're rolling out next year, so advertising. So the way that this works is based on what you're buying as a consumer. And you can, of course, can opt out if you want. But if you buy golf clubs, then all of a sudden you have on the receipt, which for some reason 45% of people buying through PayPal open up their receipts, a ad for a bag that would go really good with your golf clubs. And they know based on the algorithm and based on what you're buying and based on what others buy, what may sell. And so this is going to lead to a lift there through advertising. They brought in a guy from Uber as well to lead this, but basically it's an all new team that is in charge of PayPal, and they're actually using their core strength. And going back to that moat, why is the data a moat for PayPal? Well, let's say that Fastlane, this guest conversion, actually works really well. It is best in class. Yeah, others can copy it line for line. But if you don't have the same quality of data, and there's like 3 companies in the world that do, then you're not going to be able to have the same results. You're just not.
I think those are some very. I think to kind of summarize it, basically, you're saying that the valuation for PayPal is very, very attractive right now, and they're also not really counting into any growth at all. And there's all of these, potential catalysts that could be coming, and and these things are real. Like they actually have the data, they actually have access to it, and it's just depending on whether or not somebody wants to come in and do something about it. It it's actually it makes it sound exciting. I mean, I don't know, Garcia, you have any thoughts about about that at all?
And for me, like I think I'm going to remain a skeptic until I see those he's saying that there's EPS growth, but I would like to see a couple quarters of actually of this actually affecting their bottom line, their top line. So and I'm sure, and I think it will. I think it more likely than not it will, but I'm not going to put my money behind it. But I was sharing. I just shared one of the posts is like right now a lot of people are investing in PayPal for the valuation, because it's in the dirt for people who do valuation metrics on companies. I don't really do that. For me, the way I'm approaching investing in Palantir is like, okay, I'm just going to DCA, whether it's high or low. If it's on extremes, RSI's at 100, then maybe I might not buy shares that week or those next couple of weeks, but I'm still going to buy maybe like 25 shares. I'll still keep adding, um, because my main goal is just to get as many shares as I possibly can. But with PayPal, I think once we start seeing it with their numbers, so in the post it shows like their revenue growth, gross profit, and net profit over the past almost 2 years, from Q3 2022 to Q2 2024. So you'll see there side by side. You see Palantir and PayPal, the way they're growing. I know it's not fair to compare them side by side; they're in different sectors, but because we're talking about them, I just wanted to show, as far as like the growth, it does seem like, PayPal is growing at a much, much, much slower rate. I mean, so I'm just curious if like the net profit is going to be growing, from right now, I think it was 1.1 billion. 2 years ago, it was at 1.3 billion. So, it actually went down over the last 2 years. So if those changes that Alex Chris is implementing, if they actually affect the top and bottom line, then I do think that from here on out, it should start performing like an actual company that's growing, not dying. Because yeah, I was looking at the active users, and you could see the growth, throughout over the years, 2015, 2019, and then 2020 during the pandemic, you saw an acceleration in active users. So I'm sure if you put like the stock price over that, you'll see that kind of quick rise and that meteoric rise of everyone kind of piling in. But then as soon as it started really turning over, then it started shrinking. I think that's where the kind of like stock kind of cratered, and people, I guess, really, really sold off. But I mean, it's just incredible to see Palantir's like very, very consistent growth in, profit and net profit over time, quarter after quarter after quarter. You see a very consistent, reliable growth there. With PayPal, it just seems like it's really stuck in the mud. So I really do hope, that they do get things right and they see it in the numbers, not just in announcements or promises. That it actually shows up in their top and bottom line. So
Yeah,
Yeah.
let me push back on that a bit there. So I don't know what chart or what data you're looking at. Do a double check as well, but yeah, they've been growing. The way that their slide deck is it goes from left to right as far as most recent to less recent. So you may be looking at a little bit backwards, but that those gap net revenues, even non-gap non revenues continue to grow. They did have one quarter. They have like two kind of different things when you're looking at PayPal. Quarter four is always going to look ridiculously good just because that's holiday, you know. So that's one of the reasons why it's useful to compare year over year versus quarter over quarter, because quarter one always looks like it sucks and or looks amazing. You're always going to get that in this industry. Now, the other thing too is last year they did have a deal where they sold off a bunch of their loans just due to risk over to KKR in Europe, and so they had one quarter where free cash flow was looked like it just fell completely and it was terrible. And then the next quarter, when they realized those loans, there was just a delay between that. Then all or the selling those loans, then all of a sudden their free cash flow looked amazing. Now if you actually, I think, you know, as far as net income, they're doing well and they're continuing to grow gap net revenues as well. Free cash flow, I think, is probably the best metric for this. And so if you'll pull up free cash flow, you'll see what I mean. I don't know how to share on this chart, but yeah, quarter two is when it was down. Quarter three is the first
Oh,
quarter that Alex Chris was here. But
Carl,
realistically,
do you have it on your profile? I can share on the spaces so everybody can see.
yeah.
Let me
Um,
see.
let me just reshare this, and
Okay.
then this will be the most I'll do a repost. I'll just repost it here. There we go. It'll be the most recent thing. You'll see that graph of my own at the very top. So uh, basically, outside of one-time boosts, which quarter four had some of, quarter three had some of as well. Quarter one and quarter two are the best two quarters that PayPal has ever had as far as free cash flow. Their revenue is again getting close to double-digit growth, and yeah, net income is doing well. Transaction margins, that's been a concern just because of competition. It actually improved in quarter one, went back down to where it was in quarter four for quarter two. I think
Hmm.
we're at or near the bottom. Some of the drivers of those things, just the way that they had as far as their Braintree, their payment service platform strategy, they've
Hmm.
changed that, and Venmo as well. Like the craziest thing. So, just one little anecdote: the previous management was like, "Hey, let's try to get Venmo to be used as a payment resource,
Yeah.
not just branded PayPal, not just Braintree." That's fine, but they priced Venmo cheaper than branded PayPal. So they began competing with their own product. It's just like the analogy for PayPal is basically this: that you have a pretty good team of talented athletes for the most part that just aren't playing as a team, and a head coach that, I don't know, maybe he's drunk off his rocker. Then you bring in a guy that actually has had a lot of success with Intuit, and he's able to bring these different athletes together as a team. And instead of competing with one another, they actually compete with the competition. So that's where PayPal is.
And to add to Garcia, I remember back in December 2022 when Palantir was coming with their earnings, and they were promising all kinds of like higher growth rates, especially on the commercial side in 2020, 2021, which is when during the hype cycle, and their growth numbers have like really disappointed, and their stock price is plummeting. I remember everybody was saying like this is a trash stock, and I went on your YouTube. I was just gonna basically
Hmm.
like I kept buying through. Like I have like a 5.99 purchase there too, right? So I wonder if you have to make a company prove that they're turning around in terms of their growth metrics, in terms of EPS, in terms of top and bottom number. I wonder whether or not that's too late.
Whether it's too late as far as, oh, I see what you're saying. So waiting till they turn it around, the stock price would have already kind of recovered or
Correct.
moved up so much. And I think so, and I think that's where that conviction and that belief in management, knowing what you own. I'm the first to admit that I don't know much about PayPal. It's because I don't own it. I'm not interested in fintech, but I like to share memes. I like to tease. I like to in good fun. It's never in a bad intent. I kind of throw rocks really at everything. I just kind of I make a meme of whatever I see on the timeline, and then I'll share it. But it's really not. I don't really try to attack people directly, but I do think so. I think we're going to be seeing that, especially if what Roy is saying, where they're increasing their earnings per share, because eventually the stock price is going to start following that those profits, earnings per share, all the fundamentals are basically going to be improving. And that was one of the things that shocked me when I learned that they don't really make much money off of Venmo. Like that, despite everybody using it, everybody knows what Venmo is. Almost everybody uses it. I don't know if Roy, is that still true that PayPal struggles to make money with Venmo, like with the way they're pricing it or with their margins?
That's some truth to that. Some has changed as well. So the peer to peer portion. So if I'm sending money to you through Venmo, usually they don't make anything off that. So there's always going to be a bit of that. They ended up pricing Venmo now equally as far as their margins, as far as their rates with branded PayPal. So that
Hmm.
corrected a major mistake. And there was a lot of brouhaha over Amazon. Initially, I think 2 years ago or so, 2.5 years perhaps, Amazon and Venmo was a thing that you could use Venmo on it. When Alex Chris came in, there wasn't a discussion on the reason, so we don't know for sure. We can only speculate. But Venmo and Amazon announced at the exact same moment, basically, that they were no longer on each other's platform. And so I'm guessing that part of that was just under Dan Schulman's strategy. Like he would use Braintree, which is their payment service provider, and Venmo, and be perfectly fine sacrificing margins and even losing money on it if it meant increasing volume and users, which is a very dumb strategy. Like it's so dumb. I don't understand what he was thinking, but so yeah, there's a bit of a drain. You get less. The highest grossing product for them is the cross border payments. Branded PayPal is next, and then Venmo and Braintree are just going to get lower margins. It's kind of the nature of it. But there's some growth there. They actually mentioned that Braintree and Venmo transaction margin percent increased over this quarter. That was a surprise to me.
Wow. Yeah. So they were trying to use Venmo or these Braintree almost as loss leaders, I guess, like try to get people in. But I get yeah, and I guess I'm kind of curious as far as how they were going to try to make money off of them afterwards. If they were losing money per customer once to bring them in or to get active users up. I wonder what their plan was to actually start monetizing them.
Yeah, so I don't. They did make money off of Braintree, but in some cases there were rumors, and now with Alex Chris's transparency, the new CEO, he's awesome. Unlike Schulman, it was a little bit of a black box, and you know where that phrase comes from. But they it ended up there was a lot of companies that said that Braintree was being offered at basically a loss as a loss leader, and that they thought PayPal's strategy was to try to make up that with other value added services. So perhaps if they're working with Uber and they're using this Braintree all of a sudden as their main payment service provider, then maybe Uber will also use their fraud protection or something like that. And that strategy wasn't really panning out. So I'm very glad that Alex Chris has gone away from Dan Schulman's strategy. It just didn't make sense.
I see. Huh.
And that's one of the things with this company that I got very wrong. I was looking at this back in April. I didn't get in. I
Hmm.
think May of last year, late May or June, was the first time I actually bought some PayPal. And I was looking at it just as a trade. We didn't know who the new CEO would be. I didn't think things were as bad at PayPal, and it's disorganized. Like you look at the balance sheet and everything is like, it's fine. It's fine. There's some things to fix here and there. There's some efficiency issues for sure. But no, when Alex Chris came in, he came in and he's like, "Hey, this is trash." Not quite, but like he came in and the earnings call was very frank, was very direct. And I had not heard of him honestly when he came in. He was announced in late August last year, and I had to do some research. I'm like, oh yeah, he's with Intuit. Maybe I have heard of him, maybe not. But just looking at his past success, I probably went through like I don't know, 15, 20 hours of video interviews, read a bunch of articles that he had said. I'm like, this guy is actually brilliant. And you see what he did into it. And I'm like, okay, he's being brought in. We'll see what his strategy is. And as I got to know, what he was going to do, and he's going to make PayPal more efficient. He's going to make
Mm-hmm.
PayPal so it actually focused on its strengths instead of just, hey, let's do as much as we can and hope it works out. Throw a spaghetti at the wall and see what sticks, like under Dan Schulman.
Right.
And then with these first look products that were announced, and I know the world laughed at it because he said shock the world, and he didn't mean that like the next day or the next announcement or the next earnings. But the shock was the world had written off PayPal and was thought, hey, these guys are going extinct. And the reality is they had not been using their core strength at all. It just had not been well managed. And so the strategy that he's rolling out seems like it's already working. Like you see just phenomenal EPS growth, 36% year over year in quarter two. And I don't, frankly, quarter two is good, but like look at quarter one, it was freaking fantastic. So what he's able to do even before Fastlane is really fully rolled out. It was just in a pilot program. They've launched it here in August. One of the really interesting things that happened this week is there's three big payment service providers in the world: Stripe, Adyen, that probably nobody has ever heard of if you're not in the sector, and then PayPal's Braintree. And there's some smaller players and such, but so one of their two big competitors in the space, Adyen, announced this week that, hey, we're going to partner with PayPal and we're going to push out Fastlane. And so I know that PayPal's getting something for that. But when one of your two competitors basically says, hey, we're going to use your product, yes, every single payment service provider does use each other a little bit. They just have to. It's the nature of the space. But you don't make a big deal about it, and you don't make big announcements about it. This is the first time we've ever seen something like that between Adyen and PayPal. It's significant.
Wow, that's pretty cool. And what you're saying is true as far as whoever's leading the company is very extremely important. As we know, we're both invested in Palantir for the same reasons. It's having a CEO that's going to have that vision and who's going to execute those decisions to actually push the company forward, keep innovating, keep growing. I mean, you can have, a CEO who's going to keep riding the company into the dirt, not using it to its full potential. Yeah, because, you do see like the actual, you see PayPal, how much revenue they actually get, quarter. I mean, it's insane. It's in the billions. So it's to have a CEO that's going to actually be making the company leaner, actually start growing the company again. I mean, that's where you'll start seeing it. And my biggest thing was just when talking about people who had invested in PayPal is the only thing I guess I wanted to remind people is that, I think they're seeing more the people who kind of recently started investing in PayPal, over the last year or so. But I guess I wonder if there are any left who are still holding from 2020, from they were at 300 a share. So anybody who DCA'd even responsibly is, I don't know if they either sold off, but I just really haven't really heard anyone on Twitter, on X, talk about being under on PayPal. So I guess for me, I just wanted to, I'm just kind of curious if every single person who was underwater just sold, or they're really just not sharing, but
Yeah, I think it's probably 90 to 95% just gave up, and rightfully so. If they cut their losses at 100, like they're probably like, man, I really dodged a bullet there. Former management was worse than I expected. I thought that they were okay until Chris got in and is like, okay, yeah, that big issues there. I have talked to a few people that have held on, and they like what they see under Alex Chris, like that basically. So for PayPal bulls, there's a couple of different camps. There's a lot, honestly, that are just in here for a trade, and that's fine. That's
Mhm.
where I was initially until Alex Chris came on the scene. I got to know, his strategy, his plan. I'm like, hey, this will be actually a long position for me. It's not just a trade. I'm not out. Robinhood for me is just a trade. Man, that's worked out well. But with Alex Chris, just a lot of innovation, implementation, and that's where a lot of PayPal bulls are. They're like, hey, Alex Chris has this great plan. He's using these core strengths. And then there's a valuation piece as well. And so some people just purely look at valuation, but you can find a value trap. And a lot of people accuse PayPal of being that. it's been an opportunity cost, but I think it's way too early to say value trap at this point. We can
Mhm.
see consistent growth, top and bottom line. We see innovation. We see operation efficiency. And yes, Garcia, buybacks, $6 billion of buybacks. It does form a base. First time that I mentioned it,
Yeah.
it's not a core thing to the thesis, but it provides a margin of safety there for PayPal. And so the main thing for me is like this would just be a trade if it was about valuation. But since I find it more compelling than that there's a story here. Now, if you were to say, what do I think will grow the fastest over the next 5 years, Palantir or PayPal? Probably Palantir. I'm positioned accordingly. But there's a lot of forward growth priced in, and there's a measure of risk there with Palantir. Even though the company itself is great, it's not inexpensive. I'll just say that.
Yeah, like all it would take is just one quarter of even either slowing or something happening, one quarter for a lot of the growth to kind of get priced out, and the stock to tank for a couple quarters more before they start, if anything like that happened for Palantir. Um so yes, a lot of that is, getting priced in. And and for me, like the way I see it is, I'm only really all in because there is no limitation on how much I can be concentrated. So I mean, if I had to, diversify my portfolio between like 10, 20 different companies, I think PayPal might be one of them. PayPal might be one of the ones that I'm maybe 1-5% allocated into if I had to. So I do think from here forward it is going to be growing, faster than some other companies. I think a lot of the things that I was saying was kind of getting, misconstrued, or I probably didn't word it correctly. I was really just kind of shooting the shit with Kat, and when I was getting tagged in the posts. But yeah, then we got quite a few different PayPal bulls kind of tearing my comments apart. So it was very interesting back and forth. But
Garcia, it's hard when you're known for like these hardcore memes. Like when you're known for awesome memes, it's hard to to not get a reaction out of it.
No, I
Um,
know, I know. Yeah, and I should have expected. I should expect it. But I am willing to take it back. I'm not gonna block anyone for telling me anything.
so you're gonna buy PayPal maybe potentially in the future.
No, no. Maybe once Palantir hits 504 a share, and they're a top 20 company on the planet or something. Just when the thesis has really really played out, and there's really, that I can see that, okay, their growth is like gonna start slowing down. They're a mega cap, like they're really like, then I would start kind of diversifying or start moving funds into, like, I mean, I'm kind of waiting for Anduril to go public so I can start really investing in them. That's probably the company I'm looking forward to the most. That SpaceX, but I think Anduril, man. Like once Anduril goes public, I'm very looking forward to putting at least 20-25% of the portfolio into them. Especially if they go direct, just like Palantir did. If they do a DPO and they allow, share retail to buy in at a lower valuation than if they went through a DPO, or is it IPO, then that's probably the main one that I would look into diversifying.
Interesting. I'm going to try to pass the mic around a little bit, but Roy, I have one
Mhm.
more question for you. So a lot of the fundamental folks they don't really believe in technicals. What are your thoughts on technical analysis?
It's useful to an extent. I rely on it and use it a fair bit less. But the reason why technicals work is because a large number of people and even algorithms are set up and believe in technicals. So if enough people believe in something, like it becomes a self fulfilling prophecy at the very least. But I think that there's more to it than that. Um, Catalysts trump technicals, and performance trump technicals, but not right away. Like so, PayPal has been executing under Alex Chris, quite well for 3 quarters, and has been largely ignored. And so technicals would have told you, probably to wait until close to this time, a breakout here, and that might have been the smart thing to do. So it can help you know when to get in and when to get out of a position, or when to be careful. Versus if you give yourself time, and we in retail, we have that advantage for most of us anyway. We don't have to show amazing results every single year. So like 2022 for me, honestly, was just terrible. It's 90% in Palantir. You look at the stock, it was garbage. 2023, very different story. 2024, different story. 21, different story. But yeah, we can give ourselves some time. Technicals, if you're a trader, like you have to use them. But most of what I do is not trading. It's just buying and holding. I'll sell some options here and there. I'll, buy some for short-term trades, but it's like maybe 5% of my portfolio.
Yeah, thanks for sharing that perspective, Roy. I think there are a lot of fundamentalists are really not even wanting to engage with like people who do technical analysis. So I'm glad that I'm very glad to see like I feel like you admit like a few people are just really friendly towards like us technical analysts. So we appreciate you coming on and talk to us about this. I do want to circle back to you about your thoughts on Bitcoin miners because it's interesting that you're also involved. But I'm gonna pass the mic around a little bit. Freedom, are you there?
Yes, sir. Thanks for having me, Kat. Appreciate it.
Yeah, thanks for joining the crew, man. Kind of wondering your thoughts. I saw that you posted a Palantir chart. You're kind of expecting, based on early wave, you're kind of expecting probably retrace to the upper 20s. I don't know whether or not you've charted PayPal, but kind of wondering kind of your thoughts in terms of the technicals, if you can kind of compare the two and kind of share with us what your thoughts are.
Yeah. First of all, yeah, thanks again for having me, and thanks to Crossroads and Garcia. I am more on the technical side, so it helps a lot to learn this fundamental piece. That's kind of why I joined in, and I get to learn from people that are more on the fundamental side. So definitely interested in both companies. PayPal, I got to admit, I'm just so impatient that, which I know is like the number one rule of making the most wealth, but it's just so slow for me. But I do have a very bullish outlook long term for PayPal as I do Palantir. But short term, Palantir, I do expect a little cool off just because most of the indicators are pretty overcooked right now. So I just expect, nothing insane, but yeah, mid to high 20s before probably 50 or 60 going into, late 2025. And then PayPal, actually, I'm expecting probably even as high as maybe 150 over the next 2 years. And then probably a cool off there too. So I probably look a little bit shorter term than most people on this stuff, but long term, I'm super bullish on both PayPal and Palantir. Now I don't know the fundamental side on these, but I do. I mean, the charts look great, so I'm sure there's going to be some catalyst. I'm particularly interested in what PayPal is going to do because I have it going. It sounds crazy, but over 1,500 by like 2035. So I don't know what's going to happen, but hopefully something does, especially for you, Crossroads, and anyone else investing. So that's kind of my quick thoughts on the technicals.
Was it more just based on the fact that it just retraced so much, and that if you do like kind of like Fibonacci sequence, you think that it could go a lot higher just because it retraced so hard so much? Is that kind of like the thought behind that, or?
Yeah, so like really, it's just I can. Sorry if you can hear the treadmill. By the way, I'm trying to kill two birds with one stone. But I'll post a PayPal chart long term. But yeah, it's a really bullish chart. It's just been in a huge downtrend for a long time, and I think we're basically starting a new 5 wave sequence. So I think it's going pretty high. It's just for me, it's just so slow that I feel like um, like I said, I'm probably in the minority here, but I just don't have the attention span for it. But I do think it's a great long term play. As with Palantir, obviously Palantir moves a little bit faster, um, but I think they're both great. But I'll actually put my money where my mouth is and put some charts in here once I get back. So sorry about that.
No, don't be sorry. I mean, I kind of agree with your sentiment. I was looking at the 20-month moving average. That's usually kind of how I look in for a longer term trend, whether or not there's like a potential trend change. And it looks like, PayPal actually finally this month got back above like the 20-month, and actually the 20-month is actually starting to kind of flatten a little bit here. So there's like something great to say about that. I think the same thing's happening like Chinese stocks too. Like I just kind of look at them, and like now everybody's losing faith, and now the technical is actually turning a little bit positive. So it's kind of interesting. I think Heidi, you have a question for Roy. Go for it.
Hi, Roy. Hopefully you can hear me. I am wondering, like when I'm looking at some of the fundamentals for PayPal, I see decreasing net operating margins and increasing operating costs. And I wanted to hear your response to that when I see it from 2022, 2023. From what I can tell, in 24, they've increased that by a mere 1%. And that would be my concern from a fundamental standpoint, as well as the moat that you had spoken about earlier. Um, I know you said that they're putting things on receipts or on the tickets, but I'm concerned about there's no moat there, and there is constant new competition that's coming in with new and more advanced. And so I was hoping you could address both those points.
Yeah. So on the transaction margin piece, a lot of that is a mix shift. What that means is they get their highest margins from branded PayPal, especially cross-border payments. And then Braintree, which is that white label payment service provider. They have some other products as well. Venmo is one of those, PayPal Complete Payments. Those are lower transaction margins. So under Dan Schulman, there was a lot of growth for Braintree. And so it's growing at, 33, 34, 35% year over year. And what that was, and branded would grow like 6%, 7%. And so all of a sudden it looked, your margins were decreasing, and actually decreasing rapidly under Schulman. There's a little bit from competition. It's always more complex, but basically I would say that's 90% of what's going on there. You do see, if you look at the quarterly, that there was an inflection. So quarter four looked like it bottomed. Quarter one, it improved. Quarter four again, or not quarter four, quarter two, it went down a little bit as well. But as far as the moat, what that is most payment service providers like Adyen, they just see one side of the transaction. So Adyen is all about merchants. There are others that are just really focused on the consumer. There's not many, especially that are global, that have both the merchants and the consumers. Block is one of those that does, but it's largely here in the United States. And so, competition is out there. But you look at the scale of PayPal, again, 435 million active users, 35 million of those are merchants. It's a global system. They have data that basically rivals JP Morgan Chase, and they've not leveraged it well. So all of a sudden, they're using this very rich qualitative data on a massive scale with their users to drive, actually, there's 7 different products. So I just mentioned Fastlane because I think that's the one that's going to be fastest to hit the ground. The guest checkout service, which about half of people out there, I think it's 44%. Don't quote me on that, but prefer guest checkout, and it's a massive TAM. There's actually a little bit of a race towards that. And in this space, yes, there's competition, but the TAM is so immense. And frankly, a lot of the early competitors like Bolt, like they failed. They didn't do what they needed to do. MasterCard and Visa tried. They failed. The reason why they failed is because for Bolt, they didn't have the size and scale of PayPal. And for MasterCard and Visa, they do not have the double-sided network that PayPal does, where you have both merchants and consumers. And you really need that to be able to push out that guest checkout process. I have a whole long post in my portfolio. I think it's maybe like the 6th or 7th most recent one, on why I think that is actually best in class, the conversion rates and everything. But then you also are starting to use this data. The other two I mentioned that I'm most excited about are the advertising vectors. So a lot of time advertising is just you clicked on something at one point, maybe you bought something at one point, you put eyes on something at one point, it'll offer you an ad. PayPal knows exactly what you bought, and they know what others like you bought, and you are then offered through PayPal on the receipt. You also offered these advance offers as well, these products from different merchants, and it's a little bit different style of advertising. It's not like Uber is doing. It's not traditional Meta or Google type of advertising. And the interesting thing with all these products is it doesn't really cost PayPal much at all to implement. Like they're not having to build these things out. They already have the data. They can roll it out really quickly to their user base and these merchants. And so it was just sitting there ready for the plucking. And if somebody else tries to do what PayPal does, they can copy line for line, but without that high quality data on that large scale, it's going to be tough. Now, let me give you one other piece too. This is one where it's more of like the moonshot or the long shot. You might have heard of the PayUSD, PYUSD stablecoin that PayPal rolled out about a year ago. It's now on the Ethereum chain and the Solana chain. PayPal does not own its own payment rails. And so what they're doing is they're paving new digital payment rails, which is going to be a substantial boon to their margins. That's not a guaranteed thing. I would actually rate that as maybe like a 25% chance of really widely being successful, although it is something that they're using with their Zoom product already. It's going to take time to build out on Web3 first and then scale adoption. But if they hit that, and again, I'm a bull, so maybe I'm even seeing it too optimistically, but if they are able to do this, like margins are just going to look ridiculous because all of a sudden they own their own payment rails and it's a whole lot cheaper to do things on Solana than tradition paying somebody else and paying all these toll booths with the cross-border payments or anytime that they need to issue a payment.
Heidi, did you get your question answered?
Yeah, somewhat. Yeah.
Do you have any other? Do you want Roy to expand on anything else?
No, I think I'm good. Thank you, though, Roy. It was really a thorough explanation.
And it's my turn. You know how I've been trying to cut off someone talking all show. Nah, I'm just kidding, guys. Now, I just want to put in some 2 cents real quick on PayPal chart weekly and monthly comparison to Palantir. Everyone knows I have a bunch of Palantir, but so PayPal, man, I don't know. I have such a strong bias to this company, but this move looks really good. Like all my indicators, like Freedom was saying, flipped extremely bullish on the weekly chart. Picked up a bunch of volume. If this next week continues to increase in, whale activity, I would say this thing can definitely shoot into the hundreds. But right now, it's got a lot of sell orders at the 70 to 76 range. So that's going to be its biggest area of resistance on like the weekly chart. And once we get past that, there's really nothing stopping this from like entering the hundreds. I'm not sure about 150, maybe, but with it moving so slow, I would say it's more likely to retrace at some point and find higher support. But either way, this chart looks like it's starting a nice move. Where I agree with Freedom again that Palantir looks like it's probably going to start to cool off here in a bit. But on the weekly chart on Palantir, indicators are already coming down a bit. Still not selling here. So even if we retrace back into the double like 24, 25, I'll be okay. Because with Palantir on the weekly chart, if you notice, it really doesn't stay down for long. Even when it comes under the 10 and 20 EMA, that's typically a sign that you should probably enter an increased position right there because protects this area pretty good all year. Since actually 2023, it's kind of been moving in this like staircase formation. So weekly looks fantastic. And then on the monthly chart, there is yeah, it still looks pretty good on the monthly chart. I just want to see a monthly close over 31, which is right here. So we'll see if we get that monthly, maybe 30.5, but overall, still pretty bullish chart. Looks like it's going to charge up and then go take out those higher digits. But overall, both charts look good. Can't really go wrong. But I don't think I could trust Palantir or not trust Palantir. I don't think I could trust PayPal. I still have to see what their new management and what that dynamic brings to the team. But fintech I typically stay away from, and my main portfolio is AI, but overall, both charts look good. Congrats on anyone who has these.
Yeah, I mean, I'm looking at the charts myself too, and I do think that PayPal is probably going to hit some retracement from like 75, 76, 77.
Yep. Thank
It's
you.
probably
So
going to come back down to like maybe like the mid 60s, and that I might actually be interested in start buying around there.
okay, me too. You convinced me. Stop it.
for long term for it as a trade.
Yeah. Because I mean, people think I don't talk about nearly any of my portfolio, but I do have stuff on long term. But I guess PayPal looks good, and with this new management, I guess I have to look over the CEO and do some research on how he's ran previous companies. That would mainly be my biggest points that I need to hit if I'm going to invest in this company. So I'll look into that later.
Man, if Roy was able to convince you to buy PayPal, that's like I don't know. That's like it's pretty
He
bizarre.
was hitting some good points. He was hitting some good points. These spaces are dope because you think you hate a company. Like remember, I had macro to micro. He hated me, blocked me because it was like Q1 2024. He was like he's about to blast, about to blast off, and I'm like, all right, just for that, I'm gonna buy puts, printed, and then I forget Sky got him to unblock me. But ever since that dilemma, I really didn't look at PayPal, and I had a little animosity towards the chart. But today, that animosity turned into let's do some research and possibly add it to the hodl. It's a slow moving train, but it's a train that moves. The chart looks good.
That's amazing. That's absolutely amazing. Because you're coming, you're all like Team Palantir, Team Garcia. No, I'm just kidding.
Yeah, well, I'm Palantir Moby Dick, so it's so hard to shift my conviction to that, or for me right now to even start a new long term position in the middle of a bull market is something I wouldn't consider doing. But like I said, if we can get a pullback in PayPal, like Freedom said, 150 looks pretty pretty doable, 100 for sure. But this momentum that it has definitely can't be overlooked on the charts.
Yeah, I still think it might take a few months to play out. Like, I'm not sure if PayPal is going to hit triple digits by like the end of the year, but I think early, like 2025, first half,
Yeah,
it's entirely
absolutely.
possible. Yeah,
So snagging it in the 60s might be a deal.
yeah, I think so too. So that's kind of what I'm eyeing on too, technically speaking. And also, it's great to hear about like I have actually do like agree with a lot of the points that Roy was making about the fundamentals. The biggest question is whether or not Palantirs do better. I mean, it's ran a little bit hot. I do
I
think that
think it's
yeah.
not a question. I think Palantir has a lot more. It's a lot more versatile than fintech. Like I think Garcia touched base on this. Sorry, I was so quiet. I was taking my dogs on a walk and stuff, but I definitely was listening. But I mean, the concentration of I would say the like fintech is so saturated, in my opinion, where Palantir is in a saturated AI world, but it's dominating. So there's a complete difference. And with PayPal, you have this technology that hasn't thrived in so long because you have Quick Pay, Apple Pay. There's other fintech and other payment cross-border stocks that are a lot easier and simpler to use. Like I've used PayPal one time and it was to pay for my subscriptions for my indicators and I was so confused using it. It seems sketchy. So hopefully their interface, that's one thing I hope the team can change is the friendliness of their interface to use it is really what turns me off with this product. But with Palantir, I don't use the product, but fundamentally you see what people are doing with it and that attracts me more than like what fundamentally people are doing with like PayPal. Like, like it's like an XRP type of coin in my opinion. Like the technology is there, it's good, but if you don't have the marketing, you don't have the team to push it, you don't have the retail to want it, it's going to be kind of hard to attract long-term investors where PayPal or Palantir is not even trying at this point and they are overloaded with boot camps and they're getting these contracts that are hard that are they're doing everything right and they're not even trying, so that little effort, or I'm sure they're putting a lot of effort, Alex is making it look effortlessly, comes off very attractive compared to PayPal, with their previous track record. But hopefully the CEO can turn it around. Obviously the charts look, it can't be ignored.
Yeah, no, I always love to bring out the fundamental side of A and the long-term investment side of A because he's trying to, do this like trader kind of appearance. That's kind of what your branding is. But
Yeah.
like, all of us, we have things that like even if they're out there, talking about their trades, like, they don't really share their long-term positions, but they have like very very sophisticated thoughts behind the scenes. So, Matt, speaking of XRP,
Oh
you
yes,
there?
I'm here. I'm listening.
XRP. Take the mic
XRP
away.
is
You're
doing
about to
things
lose
that
your
I like
co-host
too.
spot.
Yes, but
No,
this is not an XRP space, so I don't know if I should talk about it.
You're about to lose
no,
your spot tomorrow on my space, brother. Don't do it. Don't do it. No, I'm just kidding.
No, but Matt, yeah, way to lose engagement. I think you just gained like 2,000 followers over the last month. But anyway, but dude, please share your thoughts in terms of what you think about PayPal
Yeah.
here.
So, like, I'm basically the opposite of everybody else, like Roy and everybody. Like, I'm TA first, and then I like glance at the fundamentals and stuff. And I think with PayPal, I really was telling a bullish signal like 3 weeks ago after like that major crash, and I'm like, it was holding levels very, very well during that crash, and that was like the sign that it just wants to go higher. So, but in regard to the fundamentals with PayPal, like they're building more and more crypto on their balance sheets too, and like Bitcoin and stuff like that. So, like that's ultimately could be a good crypto play in the future, which could also catapult everything going up further as well. So, that's the only fundamentals you'll ever get out of me for PayPal. But, but essentially, I posted that chart. I think what it says, a second photo in the chat or whatever. Yeah, so I posted like Palantir on the left. It filled that gap from a long time ago, right? That gap was very after the IPO. Basically, it just topped, and then it never got filled until now, right? So usually when that happens, that could be like a little bit of a spot for a resistance. And sure enough, it can't really get above it right now. So we'll see what happens in the future, but or in the coming weeks. But I think what's really the most likely situation, it's going to probably cool off a little bit to maybe retest the low 30s or even the high 20s, right? I think that would be a great opportunity if that did happen, because this chart is still very, very bullish. There's nothing bearish about it at all. It just hit a little resistance level. And in regards to PayPal, the chart on the right, it was a long-term support, right? You can see how long that support line was. And then it broke, right? It broke, and then 2023 had that low, and then basically now it's back there, and it flipped it to a resistance. So it's still going to be resistance until it flips back to a support. So that could take some time. I don't think it'll happen overnight. I don't think it'll happen next week. So we'll see. And not only that, I didn't post a chart of it, but on my GAN levels, there's still more resistance with an arc above around like the 73, 74, 75s, like that zone. So I think even if it does trying to poke its head, it might just be turning into another wick for the following weeks to probably consolidate. But the true opportunity for PayPal, I think, is if it does get back into the 60s, maybe mid to high 60s, because this chart is finally officially bullish after 3 years or something. And uh, nothing really else matters to me except for this is like telling us that it's about to go much higher, right? When something is in a 3-year downtrend and now it's finally bullish again, it's not going to just reverse and go back to bearish. It's going to go retest levels and maybe a few times, and then after that it'll probably break out. But yeah, longer term, I see PayPal as a very good opportunity here as a swing trader, not really a day trade. Just a swing trade. I can see it getting back up to the hundreds easily, and I think the line in the sand for me is if it ever can get back above 140, 142, then I think it can make new all-time highs. But if it can't get above 140 or 142, then I think it'll not make new all-time highs. So that's just really the line in the sand for me that I'm watching for PayPal.
Yeah, I think it's very interesting because I swear none of us, like Freedom, myself, Matt, like none of us really talk about like the PayPal chart. Like it'll be like in the 70s and it's going down to 60. Like none of us really talk about that, but we all see the same thing and we all use different techniques. So it's very interesting.
Yeah, I mean, it's you can't deny the strength in PayPal, but you also can't deny the chart that I just posted that it was a long-term support level and now it's resistance. So anybody buying at resistance, I think, is just taking a gamble. So I think the better opportunity is just to wait for a retest of maybe some levels in the 60s if that happens. So that's what I'm looking at, and I think the future does look bright for both, but just got to be patient with both right now because they had some good runs recently.
And Tracker, are you there?
I'm here.
You're here. So you're a big PayPal bull, right? You also like Rivian as well. No, I'm just kidding.
No.
Please share your thoughts,
Cat's
man.
making
What do you
fun
think
of
about
me.
all this?
Cat's making fun of me because I drew a chart like, I don't know, 4 months ago showing like predicting when Rivian would go bankrupt. Basically next year. Yeah, no, I don't think I'm not a big Rivian. I'm kind of a Rivian bear. And PayPal, for the longest time, I just looked at it. the chart looks terrible, and I'm like, this could very well just go extinct. But I'm hearing a lot of nice stuff about PayPal from this show, this particular episode, so I might have to change my thesis on it and draw some fib extensions on it. I don't have any technical analysis for you today for PayPal. For Palantir, I don't have a chart to show you. You can see any of the charts that I've drawn, though, if you just search my handle on X and then put the ticker you're interested in next to it. So if you search at SBZUNG, then put a space and put PLTR, you can see my last Palantir post there. Just sort by most recent. But I am looking. I kind of have, been trying my hand at Gann charting here, and I've got a big black circle around $35.76 on September 23rd. It's kind of neat, an intersection of some Gann lines here. But I liked the way he looked at Palantir, how he thinks it kind of goes down by $5, up by 10, test back by 5, up by 10. So just look for it to round each $5 level. I'd say
Yeah,
on the way up.
I love that you said that, brother. I literally was talking to someone yesterday about it, that Palantir moves in waves of 5. But I'm actually, with that being said, guys, I think I am going to sell my 4,000 shares here and buy back in the 20s. I think it's time.
Oh, you think
Ooh,
35
bold
to
move.
20? Or
Well,
35 to 25?
Yeah, I moved like 4,000 shares of my 28K into a separate account. I almost sold at $29, and Danny convinced me not to. Thank God I was talking to him, because I had sold 2,000 shares at $27 a few weeks ago. I feel pretty stupid.
I would advise you just hang on a little while longer. Let me look at Palantir from
Look at the quad
my
witching,
1 hour chart
though. I think we're
here.
going to see some serious volatility in September, because I think seasonality is really going to play a part in how the charts move. I know a lot of people don't believe in seasonality, but September typically is not going to be the best month. And then let's see how the market reacts to the rate cuts. What if they overcut with 50 and then the market gets scared? I mean, we know the market needs a cut, but if we don't get the 25, I think it's going to react pretty bad, in my opinion.
It's tough to say, just because we already had VIX like gone about 60. So I almost feel like maybe that was kind of like the front ran correction, but who knows? I think Roy, you have your hand up. Go for it, man.
Yeah. So as far as seasonality, there's seasonality in contracts too. So I know a lot of people are focusing on Palantir right now and like S&P 500 inclusion. And that can be a short term boost. I don't know that it happens in September or not, but what I am looking for in September is we usually, especially towards the end of the month, get a lot, and I mean a lot, of government contracts that are announced. And I think this year we might even see more of that, just based on some conversations and what's been happening in that government space here recently with Palantir. So just be on the eye for that. Not saying sell or don't sell. I'm just long, so I sell covered calls, and I'll probably be very careful towards the end of September with that.
Yeah. I would say with Palantir, just wait and see if it can't get over 32.82 before you tap out. Or I guess make sure it gets over 32.08 first, and then over the pivot at 32.24. And if it can do that, it's gonna test 32.83.
And I wanted to ask you guys. I kind of shared it in the chat with Kat and Danny and Jess. What do you guys think about this post that I just shared on the chat, where here Eraz is sharing that a lot of the mega caps, and they're kind of from what he's showing here, it looks like kind of like bearish setups in the near term. Like, what do you guys think about it? This looks like it looks like daily candles on a 3-month chart. He's showing it on SPY, Amazon, Apple, Microsoft, Nvidia, Tesla, and I'm not sure what it is. I just wanted to see what you guys' thoughts are on these setups. You guys are much more well versed on the technicals than I am. I just wanted to hear you guys' thoughts along, especially with the September seasonality, like A was talking about.
Don't be shy, guys. Grab the mic.
Yeah, I'm trying to find the post
I was just
here
saying, I'm trying to
too
just find
for
the
some.
post.
Wait,
It's on
you're
the
talking about the
it's on the top.
yeah,
The
the
one
very
that
first one.
it says, but they have you distracted with small caps again.
So
This is,
you're asking what he means by that, or what?
or yeah, or what do you
Look,
guys think about
one
those
one thing
setups?
I've noticed is the weakness that I've seen in Google and Microsoft shouldn't be ignored. Like, yeah, the markets are hot, but you have a lot of these big, large trillion-dollar companies showing weakness already in August with their candle prints. So I've noticed this already. And going into September, it doesn't matter. Like, for example, this Palantir S&P could be already priced in, which people don't understand. Like, let's see how it continues to move. But I've already noticed a lot of these big companies, I'm surprised Google's not on his list, but yeah, Apple, Google, they're all printing this red down candle, which isn't good, bro. And going into seasonality, September kind of has me on high alert. That's why I think we see um, a strong week for an August close, and the quad witching Harris versus Trump on September 10th. As long as I see VIX kind of chill out, I will be feeling okay. But if I see VIX start to spike again and start to cause have some movement, that's going to be a little concerning for all markets, in my opinion. And VIX is at creeping up at 15.8, so I mean it's not bad, but those candles shouldn't be ignored. So that's good that you posted that.
Hmm. Yeah, thank you, man.
But I think what it really means to me personally is that small caps are kind of outperforming again. Because you saw the IWM 3% up compared to some of those bigger names. So maybe that's what he means by that. Yeah.
What do you think about small caps outperforming right now just because the rate cuts? I mean, we know they're sensitive to them. So what if they're moving in correlation to like front running these like rate cuts already that are kind of already being priced in? In my opinion, I think that's why we're seeing the strength again in the small caps because
Yeah.
there's a lot of talks of the rate
Yeah, I
cuts.
see that too. And also, when I look at IDBM, I always look at ARKK. And ARKK for a monthly candle close is looking like it's going to be the first, like, kind of bullish monthly candle close in 3.5 years. So, I mean, those two going hand to hand is just proof that it might be a big rotation into that. And then after that, possibly what Kat always says, and everything rally after that. But it just looks to me that while some things are cooling off, other things are just heating up right now. And that's growth in small caps.
Yeah, but if the bull run is really going to start like everyone's anticipating, it always seems to start around October. There has to be. I'm a believer the bull run's not going to start when everything is at these prices. We need to see them. We need to see a lot of. We need to see a huge kind of like a huge down movement and stay down for probably the whole month for the real bull run to start. But that's just how I've seen all bull runs start.
Yeah.
So it'd be kind of hard, in my opinion, for them to continue an upward trajectory and then we get like a real bull run. If they continue at this pace, then I say that this is the bull run. If we don't get any liquidation event leading up until October, then I'll be really scared and honestly start selling a lot of my positions if we don't see a huge dip that can potentially bring the buyers in to push the prices to start a catalyst that a real bull run. You know what I'm
Well,
I
saying?
hear exactly what you're saying. And wait, I just want to say, I think we just had that big event
That's
August
what I was just
5th.
going to say, Trucker.
Yeah,
Yeah.
yeah.
You took the words out of my mouth. Yeah. We just had it on that
No.
3 Mondays ago. Yeah.
Because I really don't think so. Because with those V-shaped recoveries, that shouldn't be considered it wouldn't be a V-shaped recovery, and that's what happened 3 times already. It needs to be
Well,
held down for a little bit.
look at COVID. That was a V-shaped recovery, and then it soared.
But it lasted about a month, and it
Well,
was like a month and a half or two. If I wasn't instant, in my opinion, right? Let me look back at the chart, but I believe it wasn't like an instant within weeks recovery, like how we kind of have had these last 3 dips to 58.5, 56.5, and 49.5.
I think
Those have been
things.
pretty instant and automatic.
I think things are so much more exponential now. Like the way markets move. Like maybe that Monday, that
True.
week of that Monday was basically the bear market. So like we had a weak bear market, and then just catapulted up. It's
True.
like it's just
Another thing
insane
is,
it's just insane in my opinion what we're
it,
seeing here. And I think with ARKK and altcoins, they move almost hand in hand, and they're going together again, right? So it's like we got to keep an eye on that. And if they move together, then I think we might be closer to an everything rally than most people think, really.
yeah,
So
I've been buying alts, and then one thing that I've been taking in consideration that we lost the negative volatility with Bitcoin when the ETFs came into play, and with that negative volatility, you lose those aggressive moves up and down. Like so, with the ETFs, they brought a lot more stability, I guess, to the community in crypto. So that's one thing I've been thinking about. If that's why they've been so swiftly recovering instead of like hitting those nasty like weak downtrends, and I hope that's the case because then that would be that would be awesome. But I think that might be the case that we're not seeing. But then I start to wonder how these indexes swiftly recover so quickly. But I don't know. I guess I go down the rabbit hole with trading and theses all the time. So
Yeah.
And
something to
that's kind
stay
of where
on.
I'm leaning towards. I'm kind of I'm a long term investor. I'm not going to be selling any Palantir into any month long downtrend. But I do think just because it was literally like an intraday recovery. It was just like immediately got bought
Thank
back
you,
up.
bro. Thank you. That
I I
stuff.
just I, I just think it was kind of like a it was kind of like a tremor, like people got kind of shaken out. But I'm kind of leaning more than not that we're gonna get a pretty scary couple of weeks where people are gonna really start thinking, oh my gosh, this is the recession that everybody was talking about, and you're gonna start seeing like the doom and gloom in the timeline and for a
Well,
couple of weeks. And I think it's just gonna because people are emotional and they're gonna get scared. And I think you're gonna see a couple weeks long of a bunch of fear porn, where it's just gonna be like there's gonna be a pullback. And then I think that's where we're gonna see like kind of like some type of melt up, after September.
well,
That's where I'm leaning towards.
Yeah.
you're still already seeing that with Meet Kevin, and he was drinking a Stella, talking how he's still bearish like 7-8 hours ago.
I,
Yeah,
I
that
hope
was
I
funny.
hope they stay that way. I hope they keep doing that for
Yeah.
months. I hope they keep staying in cash while yields keep going down. I hope they keep doing that for like a year, 2, 3, 4 years, so the market can go a lot
Like,
higher. Seth, you're gonna say something.
Hey, good morning, everybody.
Hey, good morning. What's up, man?
Um, I'm just waking up, having some coffee, and it's 6 o'clock, so it's 7 o'clock in the morning over here, in the West Coast. So I get up pretty early for the meeting, so I'm a bit dead to the world. So forgive me.
Good morning.
Did the PayPal discussion wake you up, Seth?
Yeah, it was pretty good. I learned a lot. I actually know nothing about PayPal, and I don't invest in PayPal, so I learned quite a bit. So thanks for that. And I mean, it's just not my cup of tea, and that's what makes a market. Everybody's different. And somebody was talking about how the markets were going to do this and markets are going to do that. The discussion is all about where are we headed? And I've been doing this for 28 years, and I don't want to bore anybody with another history lesson like I did on the last spaces when I talked about Black
I
Monday.
love
So
history. You could talk about it.
yeah, well, I mean, I've just been in the markets for so long, and I love all the new people and the young traders because it really just sort of invigorates me again, and their enthusiasm and the charting and just the general excitement, and it just keeps me sharp. And I've just been doing it for so long that I don't really react the way people do right now because everybody's just got a handheld device in front of them, and everyone's just so hyper focused on the up and down movement. And I just sort of look at the broader picture, and that's just the way I am. Like I find that our personalities really, really reflect our trading and our investment, and that's super important because like someone who's got like a type A personality or someone who's just a totally different person, that really will affect how you react to the market. So I'm just a super chill guy, and I really look at fundamentals. And I used to be like Freedom by 40 and and I used to just be all about the charts. And when I first started in 1987, um, I was really all about charting, and I grew over the decades to really understand fundamentals and realized, in my opinion, that the fundamentals really drive the story. The stocks move on narratives, and whatever narrative is happening, then that's what's going to drive the growth. So, I don't want to bore you guys with an old guy history lesson, but I just think that we're really in this AI narrative, and AI is going to really move. It's going to continue to move the markets. I think by 2030, AI will add $16 trillion to the world's GDP, boosting it by 14%. So, um, what happened 3 Mondays ago? Like everyone's talking about what's the markets are going to do this, the markets are going to do that. I think everyone just needs to calm down and just look at history. Like, what did history show us in the past? History is fascinating. Like, if we really look at what has happened before us, it really reflects what's going to happen in the future. So, like who is our Fed chairman right now? It's Jerome Powell. And in my opinion, I think he's probably one of the best. He's just been doing a fantastic job. And granted, he probably should have cut by 25 basis points on the last Fed meeting. But I mean, they're really data driven, and whether what data is real, what's not real, there's an argument for all of that. And what but I just think that he's doing a phenomenal job. Like for example, in 19 in 2001, uh, the Fed started tightening, and we've been in 2021, the Fed started tightening and we've been in that environment ever since, right? So we had Janet Yellen before Jerome Powell in 2014 to 2018, Ben Bernanke before her, 2006 to 2014, Alan Greenspan in 87 to 2006, Paul Volcker before him, William Miller, Archer Burns, Thomas McBride, and then Rob Young in the World War II in 1936 to 42. And there's an argument for all of them, but Jerome Powell is just doing a phenomenal job threading the needle, and I think he will just sort of create this soft landing. And everybody's different. That's just my opinion. I'm just an old dog, and I've purchased 4 homes doing this, and I've just become sort of numb to a lot of things. And what happened with the with the carry trade 3 Mondays ago, it was totally awesome. I thought it was just super unreal. Like, and everyone is just panicking, and the 1929 doom and gloomers, I call them, were crawling out of the woodwork. And that's when I just started loading up the boat on margin. I'm a professional with margin trading. I don't advise it, but I've just been doing this for so long that margin, I only use it in those circumstances. And we're still in a bull market, and the yen carry trade was, it's been going on for 30 years, and I know quite a bit about it. And I knew that when with Japan increased their interest rates by 25 basis points, the market basically hemorrhaged, and that was just a huge buying opportunity. And we just had this, whether you want to call it V-shaped recovery, it was just a massive buying opportunity because I knew we were still in a bull market, and I just loaded up the boat, and I'm like fully invested now. So A is right. We're going where there's some seasonality hiccups coming up in September. Seasonally, if you believe in the seasonals, I think Xmas rallies starts in October, goes and we sort of grind up towards Christmas. Am I boring everybody?
Dude, I'm
No,
loving
no,
it.
please
At
keep
least I
going.
can. Yes. Here we go.
Okay.
I'm sorry, what were you saying?
Yeah, exactly right.
No.
I'm just kidding. Keep talking, man.
So, I don't know. I'm just an old dog, and I got a memory of an elephant, and I love all the new guys. I mean, it's so cool, and that you guys are just so sharp and interested, and that's what really makes a good market. Is there's going to be times where you learn, and the carry trade was just a huge learning curve for so many people. I was just getting messages after messages, and people just saying, "I'm scared," and I'm just like, and I can tell how young people are and where they're at in their trading and investment careers. And I personally was just, I leveraged myself to the max because I felt, and just all my experience that we're in a dollar cost average environment, and the fundamentals, you can look at the charts all day long, which is an awesome tool for your toolbox. But if we're in a shitty environment, like if we're in a bear market and you're dollar cost averaging, well, you're just catching a falling knife. And like a lot of people did that in 2008. And when the Fed started cutting in 2008, hold on, 2001, January 3rd was the first rate cut. So we're coming up to the first rate cut in September for which was what Jerome Powell just announced. We had a sell off the day before the Fed chairman was to speak at Jackson Hole, and that's just normal stuff. Like the markets will sort of start to price in what's to come, and that's sort of a healthy environment. Like we have this market expansion into small and mid caps, and that's another thing you want to see in a bull market. You don't want to see like the 7 FANG stocks just leading the way and there's no growth for anything else. And you really want to, you really want to see everyone rise with the tide going up at the same time. And that just sort of tells you that there's also a lot of growth. We've got an election year coming up. So in January 3rd, 2001, we had the first rate cut. S&P fell by 39% over the next 448 days. And that was the dot-com bubble. And then in 2007 on September 18th, we had another first rate cut. So people are scared that this first rate cut is going to be another 2008 and another 2001. And in 2007, that first rate cut, we fell by 54% over 372 days, and unemployment rose by 5.3%. Obviously, that which was the housing crisis. So we're not in those environments. Is my point. Like we still have all these 1929 doom and gloomers, and so we've got Nvidia earnings coming out on the August 28th after the print. We've got the Feds are going to start cutting, which will increase liquidity, and the M2 money supply is coming on. Bitcoin sort of was born out of 2008, in my opinion. Whoever created it, I don't know. I think probably, in my personal conspiracy opinion, I think Elon had something to do with it, but who knows? The Fed's going to start printing money going into Christmas. Bitcoin is just super cool. It's just amazing. I wish I had Bitcoin when I was younger. Instead of buying homes, I would have just continued to buy Bitcoin. And I started buying Bitcoin in 2013. I can't remember what I paid for it. It was $595 or something when I bought my first Bitcoin. I had no idea what it was. And I just was, someone was talking to me about it. I go, that's ridiculous. Get that out of my face. And then I just started becoming more and more orange pilled. Am I being pedantic? Sorry, guys, just yakking away. I can go on for
No,
hours.
you're
But
fine.
No,
Fine.
no, you're
yeah,
fine. I think the important point is it's good to hear your perspective from the macroeconomic standpoint. I also think that I agree with your sentiment because it's just like I remember back in like 23 years ago I haven't showered for like a whole week, and then all of a sudden I shower because like the world's crashing like around me, nobody wants to be around me,
yeah,
and like I go shower and everybody freaks out, oh my god, you're finally showering, like this must be really bad. And then the same thing happened about like 15 years ago. I didn't shower for like 5 days, and like the whole thing's crashing, right? The same thing, right? I went shower, everybody's freaking out, oh my god, like are you gonna go find a job, or like are you gonna be okay? And then like now I just haven't showered for like a day or two, and then like I jump in the shower and everybody's freaking out. Like I don't understand like the whole like rate cuts going to bring to a recession argument. Like it doesn't really
Yeah.
make a whole lot of
well,
sense to me.
the rate cuts will, like when there is a rate cut, like Jerome Powell isn't just going to start slashing. It doesn't work that way. Like he's going to cut and then see what happens, right? He's going to see how the market digests it. He's going to see how the markets react. He's going to look at all the data. Like people have to just relax. It's not just like, oh my God, Jerome Powell's going to cut, and we're going to see another 2008 housing crisis. Well, the 2008 housing crisis was totally in a different environment, and you have to look at the fundamentals. So why am I dollar cost averaging? Because of the fundamentals. Like, why am I loading the boat during the carry trade when stocks fell? Nvidia fell by um, it was an incredible amount of
Yeah, it
money.
fell down to like 90, 92, 93, or even 90.
Yeah, and it was the entire net worth of what's his name, the old fart, Warren Buffett's
Oh yeah,
entire
market cap. Yeah,
market cap in one week. Like, it fell, and then it rose, and then the huge buyback from institutions was just was unbelievable. So
Yeah.
so the Feds will cut, and then they'll see how the market reacts to that. Like, they're not just going to keep slashing and slashing and slashing. It doesn't work that way. Like, we're going to see a cut of probably 25 basis points. Like, all these people, everyone keeps talking about how it's going to be 100 basis points. Well, if that was the case, if they started cutting by 100 basis points, that's just going to show the market that there's something really fundamentally wrong, and the markets are going to completely hemorrhage. And so Jerome Powell's not that stupid. They're going to probably cut by 25 basis points. We'll see how everything reacts and behaves, and then they'll probably cut again, and the market will digest that. Like, the market is uber sensitive. It's you know.
Yeah. I already think that the market's already digesting it. Like, the rates
Yeah.
were already topped in October 2023. Like, if you look at real yields, which is what really matters, because that's really like what's really drives the liquidity, is what, like, the 2 year, 10 year, and they already peaked in October 2023. Like, they already did the work for the Fed. So I think they're just kind of falling through the market conditions and just kind of going through with the motion.
If
and
I could
I
interject, I
Um,
just want to point out too that if their decisions are based on job performance, job growth, job losses, then that is going to be lagging everything anyway. So even if they're like going to wait and see, like they do a cut and then they're going to wait and see how things are going, the job losses will keep mounting. So then, of course, they're going to keep cutting because, oh no, we got to keep cutting because the jobs are, and that just keeps getting worse because so they keep cutting because the job losses take a lot longer to process through the whole cycle than their Fed meetings. So I do think we'll see a series of consistent cuts for a little while, and then they'll cut. Of course, then they'll cut too far, too fast because they can't. It's like being on the highway. You're going somewhere and there's congestion, and you get all that start and stop traffic just because cars are being added to the back of the line faster than they can peel off the front. That kind of thing.
yeah, but I do think that the market's already digesting all that. Like, I do think that the yields and rates are already kind of market condition based anyway. So I think it's going to be okay. I don't
yeah,
know. You're going to have a lot of volatility going, but I don't think it's like 2020, 2000. No, not 2020. I don't think it's 2000 or 2008. I don't think it's like necessarily like that. There's really no. Anyway, I digress. I do want to eventually circle back to Roy and ask him about the minor position, but I do have somebody who requested to speak. David, if you want to take a few minutes to kind of share your thoughts.
Thank you very much. Thanks for having me. I just have to call out um, I've been doing space for like 6 weeks. I did my first YouTube video recently. Talk about young guys. I'm like twice as old as everybody here. Okay. There is nobody else in all the spaces I've listened to that's a pure natural trader than A. He's able to see both sides of the trade. It's a nearly impossible skill. Okay. There is no such thing as creating a divide between trading and fundamentals. Companies themselves have their implied volatility. That's a wave function. It's been suppressed by the government's policies. And so he's telling you, he's seeing the wave restore towards its natural volatility, wider ranges. Okay. This is such an important skill. So when you have bright people on here talking about history and context. We can give you context. Every single time they cut rates after a period of extended, protracted policy interference, whether it's rate hikes or quantitative easing, they reset the liability structure of banks, which are somewhat rigid, at a level above their income, which will show up when they cut rates. That's what caused the bankruptcy of Fannie Mae in the 2007 GFC. That's what caused the bankruptcy of 1,500 in savings and loans in the 80s. That's what caused the bankruptcy of Continental Illinois, the largest bank that had ever gone bankrupt at the time. And when they say the Fed has a dual mandate, that's not at all true. They don't have a mandate of labor or price stability. They have one mandate. It's to keep the banking system functioning. And there are 20 times, it's on one of our highlighted peaks, where Citigroup called the Fed and said, you need to cut rates now or we're a going concern issue. This is not 2008. Of course, it's much worse. Add up the market cap of Citigroup, Deutsche Bank, and BNP Paribas. It's less than $230 billion, okay? Do you know how many trillions of dollars of counterparty risk they have? And when does it become a problem? It only becomes a problem when the yield curve inverts. And it doesn't mean that it's inverted by 1 basis points. It means the level where Continental Illinois blew up was one level. The level that Fannie Mae blew up was a different level. When you go below the level of the inversion that caused Fannie Mae to go bankrupt, because you can't stay in business when you pay more for your liabilities than you can generate in your income. And so when you start to have say, I'm seeing the malignant seven, as we now call them, when you see them have a problem, when you see NVIDIA go from 140 down to 90 pre-market, that's a problem. That's so much market cap. You've got NVIDIA at 11% of GDP. You've got these 7 companies, 60% of GDP. They're a tumor. They're sucking all the life out of the economy. And when they're going up, they push rates up, they push credit demand, they push confidence, they push excitement. What happened to Amazon in 1999? It fell 95%. What happened to Apple? It fell 82%. What happened to Microsoft? Over 2 waves, it fell 75%. What happens is the structure of credit demand has been deteriorating since the beginning. And now you have the 10-year Treasury at a level where if the Fed didn't start cutting, you'd have mortgage rates collapse and the banks would evaporate within weeks. The whole system would fail. So what's going on right now is the Fed is actively trying to disinvert the curve. And the only question is whether they go a linear or they go a non-linear pace. Because where did the 10-year close? At 3.8, 3.799, whatever in the cash market. That's critical support. But what if it gets to 3.50? Where are mortgage rates then? So mortgage rates, which everyone needs to follow, because you guys are trading equities, which some of you are like so amazing, and the best of which is A. They're short volatility instruments, So when you see volatility, you get to one side of the band, then you go to the other side of the band. Some great traders say, hey, my band is widening. It's doing, extra wicks. There's more of a broadening out because I don't have enough policy suppression of prices. But when you get rates going down and mortgage rates going down, what does a bank do? So when I finish talking, I'm going to send over a chart from the savings and loan crisis. The savings and loan crisis, when Volcker, who was a maniac, raised rates to 20%. That caused a lot of held to maturity losses, a lot of what they call unrealized losses. A few banks blew up, kind of like a Silicon Valley First Republic, but it was not a systemic problem. Rates came all the way back down. That started the problem because inflation is great for banks. High rates are great for banks. It's great for the economy. It's great for the stock market. More revenue. Beautiful. The problem isn't high rates. It's always and forever low rates. And that's why Silicon Valley banks stress test at the time only focused on lower rates. They never focus on higher rates. Usually companies have some kind of hedging, which Silicon Valley Bank just literally paid the guy off to not admit publicly that they didn't have the hedges on. They paid him a $6 million severance package. But lower rates on the death, it's the end of nominal growth. And then you lose the revenue and you lose the whole story. So when you have a 10-year at 3.8% and you had on August 5th, you had a mortgage rate of 6.4%. The Fed had an emergency meeting. They said, we've got to stop this sell-off. How do we stop the sell-off? We've got to tell everyone we're not cutting. We've got to push down the liability on the balance sheet of leveraged traders. Remember, what caused this? People are talking about the yen carry trade. That's nonsense. The yen is only one little piece of what's going on. There's the 30-year treasury carry trade. There's the 10-year note carry trade. There's the 5-year carry trade. Everyone is short these at record amounts. Just look at the commitment of traders reports. There's historic shorts across every treasury everywhere. How about shorting of XLU, XLV, XLP? Those are part of the carry trade. The carry trade is just another word for leverage. Now, if you want to know about August 5th, we're right back there. Where's the yen today? I haven't heard one person talk about the yen. The yen is right back at the level it was when it supposedly started this problem. That the Fed, in their emergency meeting, they didn't say, oh, let's cut like Jeremy Siegel says. No, they said, we've got to stop the rise of the price of the liabilities on the balance sheets of leveraged hedge funds. Because when you see utility staples and healthcare, which last year were the source of funds, everyone was shorting every single one of these things. And they said, hey, why would I not short a utility? They're making 5% a year. I'm making 30, 40, 50% growth in my tech. I'll close out my position when the growth differentials, when the PEG ratios converge. I got plenty of time to get out. Well, guess what? They started getting out. You've got utility, well, you get staples and healthcare at all-time highs. Okay, since July 14th, when Apple hit an all-time high, we've had one new high in any of the malignant 7 since then. One, Meta on yesterday. Okay, you've had over 100, maybe 200 new highs in staples, healthcare, utilities. These are people that are having to be short and cover their shorts. Okay, if rates go lower, or excuse me, when rates go lower, and the Fed is trying to stop rates from going lower, when they do, you're just going to see more of a rise in staples, utilities, healthcare, home builders. How about Rocket Mortgage? Rocket is Carvana, but instead of going from excess inflation to normal inflation, which helped Carvana have a better business, and they killed the shorts. And that was the only long we even would consider out of the top 10 lists, because typically you have the miners with heavy shorts, some biotech, and then Carvana was the first economically sensitive one. Now you have Rocket United Wholesale. These guys have very heavy short interest. And what happens when mortgage rates go down? They don't hold the paper. They don't have a big problem. They just make more money. They get more volume. What's going to happen when mortgage rates go to 5.99? Every single broker is going to call everyone. Say, listen, I can get you a rate. You can refinance. People say, well, no one's going to refinance their 2.5% to 4.5% mortgage. Who cares? There's $3 trillion above 5%. There's $3 trillion that can refinance. So the problem is, if rates go lower, it starts to lift further and faster in an accelerating way the liability on people with leverage who are shorting. How many people said, you know what, I'm not making enough money in my value, I'm diverting that passive investment to growth funds? How many people said, my growth funds are beating my S&P by 100%. Let me divert that money to a growth fund. what happens when the differential compresses and you get a few people shifting from growth to the S&P, from growth to value, and then these things are at a high? You're squeezing the system. But the yen, I mean, the yen's going down for 13 years. People are shorting the yen. They don't even care. They don't mind if they buy a pet rock. Oh, that's an old reference. They don't mind if they buy whatever they buy. They're shorting and they're making money on their liability. These are called liability-driven investments. They make money on their short. The yen stopped going down. November of 23, Powell signals at the press conference, okay, go to town, start buying the euro dollar, the SOFR, the 1 year out. It's called the red pack. The first 4 quarters are the white pack. The second 4 quarters, that's like 1 year forward. That's the meeting that starts, let's say today is August. The meeting that would start in August of 2025 would be the start of the red pack. And the July of 2026 would be the end. So you have people buying our red pack, driving down our implied rates, while Japan is fairly stable. The interest rate differential starts to compress using the convergence of the red packs going out 1 year. Okay, it's the most liquid financial instrument there is. And then the yen stops going down 6 trading days later after the Fed signals, okay, buy some of our paper. What happened 7 weeks later? The Fed has a panic. What happened on August 5th was going to happen on January 5th. It happened on January 3rd, 2001, when they had an emergency meeting and they cut 50 basis points, and the NASDAQ rose 17% that day, and they blew up people. So they said we cannot have a refi wave right now. That's it. So what did they do? They went out there for the next 3 months and they started screaming higher for longer. We're not going to cut. Michelle Bowman and Kashkari, K2, they were talking about raising rates as recently as June 25th. Yeah,
David, I'm
yeah,
sorry to cut you off.
yeah.
And I want to say a couple of things. First of all, I think I can speak on behalf of a lot of us. We can listen to you for hours. I just want to let you know, like, we can listen to you for hours. I have to go in like 10 minutes.
Can I get 1 minute to
And I
close
just
up?
wanted to,
I appreciate it.
yeah, I just wanted, yeah, please, yeah, if you want to take like another minute or so
Okay,
to close
thank
up,
you.
please do.
Thank you. I'm just trying to get you to understand it's the greatest opportunity in history to make money. There's $500 trillion out there. Stop with the narration and do the observation. Like, when you see something weak, maybe there's a reason, and then go back and look
Yep.
maybe why there is.
And
Secondly,
for that reason, when I noticed the weakness, when you start picking up on like Warren Buffett being the most cash heavy he's ever been, seasonality, I've gotten burnt with trades. So the best thing to do is sit on your hands sometimes and really thoroughly analyze the market and let it play out for a little bit longer so you get confirmation of the direction. Because right now there's no confirmation of any direction, not down, not up. And this would be the most dangerous time to enter a position because the wrong position could have you sitting in it for weeks, months. So with that, I'm just very cautious at the market right now.
if everyone would record what he just said and play it over at bedtime every single night, you'll get rich. If you don't listen to him, you'll give all your money away. He just
And
told you.
thanks, David, for
Okay.
speaking, man.
Okay.
We learned a lot from you.
Okay, it's my pleasure.
Yeah, I mean, like, you can do a whole space just by yourself, and I think a lot of people on here would love to
Oh
listen
yeah,
to it.
open
Just
up
so
a
you
space,
know.
David. I'll co-host it. We'll let you
What do you
run
mean?
it.
You set anything up? I'll be there whenever you do it.
Sounds good,
August
David.
5th was the first wave of a whole series of waves. And when you see the rise of the rebate, the things, whether it's yen, dollar, bond, yen, bonds, utility staples, healthcare, home builders, all-time highs, that's the money leaking out into other things, and the bubble is deflating. And someone with cat's whisker eyes like A is saying, I'm not seeing what I expected. I'm taking it down. That's all. You've got to do that. You can't use structure. You can't use time frame. You can't use history. You've got to use price wrapped into your fundamentals. Okay, I'm done.
It's really interesting, actually. Go through such long, historical perspective, and then ultimately it depends on what's happening
It's
and
all
how
the
you
same.
react to the
It's all
market.
the same. Y2KFC.
actually quite interesting.
Y2KFC was one episode divided by Bernanke and Greenspan driving the dollar from 121 down to 71. Those two things are going to happen simultaneously now. There won't be an interphase. Anyway,
Thank you,
let
David.
me know when you have a spaces. Send me a link. I'd be delighted to join and give you my thoughts.
We would love to do that. Thank you so much, David.
Yeah. Thank you, David.
Have a nice
Yeah.
day. Record A.
Yeah, thanks.
Follow A. If he's not taking risk and you're taking risk, you're making a mistake by disagreeing with him.
Yeah. Roy, you still around?
Yeah, I'm here.
What do you think about all those thoughts? I think we went all the way through, like, you know, from a PayPal to Palantir discussion, all the way through macroeconomics, all the way through, you know, market cycles, all the way through just, you know, following price action. What are your thoughts? I'm going to give you the closing thoughts here for a few minutes. Go for it, man.
Yeah, I loved what Ace said. So I don't follow him yet. So I do actually. Oh no, I don't. There we go. Now I do. Fixed it.
I just followed you back.
But no, like he had a lot of good sense there. As far as macro, it's something I do pay attention to, but like I just know for myself, I'm again more of an investor than a trader. And there are times when I'll do downside protection. But you know, I think that we're climbing the wall of worry in a bull market. So there's always going to be worries. And yin carry trade was one of those examples. But I just prefer to remain invested long term over companies in companies I love and let these things sort it out. So yeah, that's basically where I'm at with that.
Yeah, the best thing we can do right now, guys, is protect our bags. Like we can switch over to the miners. I know we probably got I see a lot of my followers in here if you guys want to just briefly cover them. But with the high risk, especially stocks like those, you definitely want to protect your trades and positions. And if you're in profits, obviously, I'm a big believer of, it's not profits until you sell. So what are your guys' thoughts on the miners right now? Mara printed that full body green candle that I said it would last week. They definitely were in the trenches, but now that we left the trenches, where do you guys think the miners are headed from here? I don't think this is the week that they go parabolic either, by the way. I think we start to range in these upper teens, like for Mara, for example.
Yeah, a little bit more sideways than up. I mean, I think it's corrected enough. I agree with you. I guess the question is how high does it go, and I think we might have some, you know, difference in opinion, but we can get there when it gets there. But yeah, Matt, I don't know if you have any thoughts on that.
Well, we'll see what happens next week with miners if Bitcoin continues higher and higher, right? But the way I look at it, most of them are still stuck under a lot of resistance, right? And that's just the fact. But one thing I do want to point out with the amount of trash I've been talking about Core Z, it's actually closed above its resistance. So I'm interested to see what is going to happen next week with Core Z, because I think there's a possibility that 1060 level could be flipping to a support now, which would be very optimistic for the future for that one. But essentially, everything else besides like Wolf, that's above its resistance, and what else? Yeah, like there's so many that just are still stuck, and I don't know if there's going to be enough momentum unless like Bitcoin just starts to skyrocket. Then we'll see.
Yeah, and back to Bitcoin, I just don't see this move either being the move for where it just goes absolutely parabolic. Just with the quad witching, I've looked at, I'm gonna short every single stock leading up to the quad witching. And if you look at how the stocks performed, there isn't one quad witching in the last 3 years where the stocks have gotten up. They tank the day before, the day of, and then you hit that recovery. So with that knowledge, I already know that none of these are gonna run as hard right now, because if I am being cautious because of the quad witching, then I can't imagine how many other investors and traders are.
Yeah, that is true. Yeah, I'm just looking through all the ones right here, and they're all basically approaching resistance. Besides maybe like BTBT, that one's kind of busting above things.
I mean, even Bitcoin itself is under resistance, right? Like if you look at the daily Ichimoku, it's just got rejected around like 64,000. It's probably going to go sideways or down a little bit, maybe 62, maybe a little bit lower.
Yeah, it is busting above though. It's busting above the baseline and conversion line now. So on the weekly chart. So that's
Yeah,
isn't it funny how many spaces get the green light when Bitcoin starts to rip higher? It's when it's in its doldrums and is going down. There's like nobody talking, and then when Bitcoin rips like it did yesterday,
yeah.
there's like 20 spaces. It was funny.
Yeah, it happens like clockwork. But I mean that's good
Yeah.
for gaining like popularity and gaining momentum and stuff like that too. So that's important.
Yeah,
yeah. I
totally.
mean, I only
We're
go
in a
on live show when Bitcoin crashes that night. So I mean, I don't.
Well,
Heidi, you have something you wanted to share? Go for
Heidi's
it.
mad
Yeah,
right now that I got
I'm
100,000
gonna
times 5 leverage
disagree.
waiting for this short. Sorry, Heidi.
I'm gonna disagree with you guys and say that I think miners are in this week. I'm looking at Mara, Riot, and Hut as my top three plays, but they look like they're squeezing to me.
I'm about to drop a Mara. I'm typing it as we speak, and it's attached to my last week. So I'll show you exactly why it's not going to run this week. And I'm called this to the T last week that we'd get the full body candle. And with that being said, this week's going to print a hollow candle because this is the first time it's approached weekly resistance at 19 to 1950. So when you approach the weekly resistance for the first time and there isn't the volume to match it, it's definitely going to get rejected there, in my opinion. And there's still a few other indicators like my MACD flipped buy on dip, which typically confirms that it will dip from here. And this advanced MACD typically just goes based off of how many times it's hit resistance in the short term. And this is the first time we've hit this level again on the weekly in a few weeks. So it's going to get rejected there, and I'll re-enter around like 15 to 16. But just my 2 cents. Obviously, I can be wrong, and I don't have a crystal ball, but I trust my TA.
Gotcha.
Yeah, yeah. Now I can see maybe sideways for another couple of weeks, or maybe a little bit, down a little bit. But yeah, Heidi, any other thoughts for that?
No, I generally play a little bit shorter term than you guys do, and with options. So for me, a dollar or two up, tends to compound pretty good.
Facts. And I'm there with you too. I normally trade in the 5 or not
yeah,
5,
I
the
can see
shorter
that.
time frame. So if you're doing that, then you're definitely going to have some success there.
And I can see Riot going up to the nines, but that's basically a previous support zone that's flipped to a resistance there too, like low nines and stuff. So that's got to be a caution zone for me. But yeah, it has room to get there, but I don't know if it has room to break it.
Roy, you into miners too? Which ones are you in right now?
Yeah, just Cypher. Right now, I was in Riot before. I've been in Mara before. They are different. I think there's some leadership that's better than others, but yeah, largely in my retirement accounts, I wanted some exposure to Bitcoin, and I didn't have a great way of doing that other than miners. And I do have some of that in my core position as well. But yeah, we're still in the crypto bull cycle, even though we've taken a breather. I'm really curious if September will do the norm and just kind of be rough for crypto, or if it's going to be like last September where we're fine. Don't know. But yeah, I know where the cycle's going.
The fact that we were good last September has me scared for this September because seasonality, that means it diverged last September. So typically Septembers are a bad month. So if we already had a good month last year, I would say the odds of this month being bad are a lot more likely. Just the fact that we had a good month or a good year in September last year. So I'm cautious extra with that.
Well, but the stock market was actually terrible in September last year too, right? So that's also something else to consider. A lot of people really got scared in last September into October actually. So that seasonality kind of worked out for last year for the stock market.
Yeah, I agree, Kat. I think we're, especially with the election ramping up, and both parties just are going to dump money into the economy to make it look like everything's all rosy, and both sides were going to take credit. So, I mean, during election years, all bets are off. But seasonality, you still have to watch everything. Like it's just part of your tool in your toolbox. But I mean, I'm still a huge buyer on any dips.
And Rory, what are your plans with your cipher? Like, are you planning on holding for a while? Are you planning on exiting? Like, what's your exit strategy if you have one?
Yeah, it's I'm probably will exit next year. These are very cyclical, and so we're nearing the end of that cycle. I only own shares at this point. If we do get a big correction in September, I'll probably get some options as far as exposure. But at some point in the next year, I think that I'll sell out of that position. It's a long term, not a long term, a long swing for me.
Got it. Yeah, I think it's reasonable. I think a lot of folks are also trying to play the cycle and just ride through it again. There's a little bit of divergence in terms of how high, how fast the cycle is going to be, but yeah, that's totally reasonable. Danny's not here. I think he peeked his head in a little bit. He did share a couple of his charts. I did post them on. I did pin them. Basically, like both PayPal. PayPal had a red candle a few months ago. And he also showed Palantir. Palantir still looks very bullish, although it is hitting some strong resistance. So yeah, I think we're all just kind of thinking maybe longer term is still going to keep going for longer. We just don't know how much longer, but short term cautious, understandable. I do want to go around and just kind of let you guys have like some closing statements before I go, because I have to drop off pretty soon. So Matt, final thoughts?
Final thoughts. Yeah, I'm really bullish for the long term, but most things in the market right now are approaching the resistance level, including Bitcoin. So I'm always cautious at resistance, and especially in the stocks too. Like a lot of the indices are approaching their resistance levels too. So just be cautious out there. And I think any major kind of dip that does come, I'm not even that major, in any average size dip, I think could be an opportunity for the future, because the this liquidity cycle could be pretty large, and I still strongly believe that there's going to be like an everything rally later on, once the rates do come down, once more liquidity is injected, and so on.
Thank you, Matt. Garcia, what are your thoughts? How did this spaces today change your life?
Oh, honestly, I loved it. Like I loved everyone who joined. They gave their opinion, and just talking about the market. Just going through the entire circle around. Like technicals, fundamentals, history. Um, and hopefully people didn't. Uh, they weren't expecting like a debate of the ages. Where Roy and I were just gonna like punch each other to death on PayPal versus Palantir. Sure, we kind of hyped it up like that,
You guys were
but
respectful. If only more spaces and people could have different opinions like this, it was a pretty smooth interaction between two people with totally different views. So I enjoyed it, and I'll be buying a PayPal. I learned a lot.
I think so. I mean, and I actually once I see like other things kind of like line up, like let's say they retest 60, and I see other things kind of like really pushing up. I mean, who knows? Maybe buying like a leap or so. Just let it run and see what happens. In the account where I kind of play more longer dated options. But I mean, honestly, like, I love these spaces on Saturdays. Like I get to wake up and kind of talk market with friends, and people who also get to join and speak.
Yeah, no, great. And do you have any other final remarks or anything before we go?
No, I feel like I talked a lot. Thanks for listening to me. Sorry, guys.
No worries. I always have to have you guys in. And Roy, any final remarks?
Yeah, appreciate you guys having me on. Learned a lot also from you guys, and love this podcast. I don't get to catch it very often, but keep it up.
We would love to have you back at some point. I mean, like it's been very insightful. Like we love the perspective and everything. So thank you so much for educating us.
Anytime.
And yeah, thanks. Seth, final words?
Sure. I just have I am heavily invested into Iron, the HPC AI play. I like that whole story. CleanSpark has got the best balance sheet. That's my largest position. I think the miners are going to rip and 10x when Bitcoin hits 250,000 this cycle, and that's my target. People can laugh and point fingers, but when Bitcoin was $1,000, I was saying Bitcoin's going to $50,000, and I got laughed at then. But whatever. Palantir is going to $100. Tesla's going to $500. SoFi is going to $25 when the Fed start cutting. MicroStrategy is just going to rip. Coinbase is going to rip. Everything's just going to go higher, up and to the right. Bitcoin is love, and if you don't own it, then enjoy being poor.
You sound like Michael Saylor.
I thought that was Mike Alfred for a second.
Oh yeah. No, it's just me, man. Red Fox Rider. Red Fox is actually my son's nickname because he's a little redhead, so a little red fox, and Rider's my middle name. So I write music. I have a record deal in Europe, and that was sort of my artist name that I just created. And so yeah, I'm just bullish on everything. I think everything is meant to dollar cost average, buy the dip, buy the dip, buy the dip. That's the environment we're in. If we were in a bear market, my thesis would change and my fundamentals would change. If the numbers were different and if the narrative was different, I would be bearish. But I just don't see it, and I don't see that we're in that environment. I totally agree with the great Matsby, and the guy's a legend. Follow him, watch his videos. They're just awesome. And yeah, just be careful. Don't over leverage, and don't gamble because I just see a ton of it. Everyone's just got a device in front of their face, and they're just the whole shitcoin, meme coin, celebrity coin, and crypto world is just a whole different environment. And just be careful. And I just personally buy long dated options, and it just always works out for me. It just gives me that time, and I pay a premium for it. But I love having time on my hands of 2 years of being right. So yeah, thanks for having me.
Thank you, Seth and Heidi. Any other final words? What did you think? Did you think that yeah? What do you think about PayPal or whatever you want to talk about?
Well, I was going to retouch on the miners. I just want to point out, especially with Riot and Mara, actually, both of them broke their downtrend on Friday. So if you look at the weekly, for me, I'm seeing a still very oversold situation. So yeah, I'm going to disagree. And my last couple of predictions, I just want to point out here, have worked out in my favor. So there you go, guys. I think we bounced this week. I think it squeezes.
Yeah, I mean, like, it's a really good setup, I think, over the next couple months, but it may not necessarily play out immediately. I mean, it's just like the amount of short interest just insane, and the chart is just looking like. I mean, I don't know. It looks almost ready. Maybe not quite yet. I guess I agree with you guys.
So when I look at the 3-day chart for like Mara, it's right at close above 10 EMA, and the ribbons are blue but fanning down, and it looks like it already got rejected on my advanced RSI at $19, curving down. And I got a star on my advanced MACD and a buy on the dip signal on the 3-day and weekly, which tells me that it's for sure, not for sure, but typically when the star and the buy on the dip comes out, it means that there is a dip associated in the short term, that this could have been the top. So
what about Riot? Does that one look as bad as Mara?
man, I don't even look at it. I had bought $100,000 worth of Riot options, and I'm down 80% in March. This is really what got me into like the miners to like do fundamental work on them, because I got burnt. I just went with the biggest HODL, biggest company. Yeah, I can confirm and that Riot is definitely nowhere near the uptrend already. So 834 is where that short-term resistance was on the 3-day chart. On the 1-day chart, let's take a look real quick. On the 1-day chart, same thing. Ribbons aren't anywhere near tight. They're still fanning out, which means that it's probably going to bounce. And there's heavy buy zones at 775. So this guy's probably just going to range within like 775 to like the current range. And then there's absolutely no volume on any of the days. Let me break it down to the 12-hour. 12-hour looks okay. So 12 hours is picking up volume, but the ribbons are barely fanning out on the 12-hour, which means that the days still need to play out. So we probably got this whole rest of this week of just bouncing in these ranges, but they left the trenches, which is reassuring. That's more so why I think that none of them are like ready for this type of move. And I think the sideways consolidation range between like I see Mara ranging from 19 to 15.5. And it's going to be some aggressive volatility because the volume's there. So when the volume's there, we get those like $2 moves. So if you are going to enter some contracts, wait till we get close to $16. I'm not saying you're wrong, but I'm definitely more confident on the sideways type of action, at least for this week. Don't enter the contracts here because because the chance of risk versus reward to the downside isn't worth it, where you can for sure snag them at least in the 16s. So just protect the bags. We're going to enter volatile week. I think with Wednesday and NVIDIA's ER, the market's kind of perky, but I'm curious to see if they're going to triple beat. They need to for the sake of the stock market.
Gotcha.
And I just want to double up. Like I talked to each one of you like individually, like Matt Garcia A. I met A just a few
On a
days ago.
date. Let's go.
Yeah, it was a date. I was very charmed. I gotta say, like it's it's. And then I also talked with like Seth, Heidi, talk to Danny, talk to everybody. I enjoyed every single one interaction. I'm very lucky to have a group of people like you guys, and I enjoy all the perspectives. I have fun with you all. Let's do this again. So,
Awesome, Kat. Thanks for having us.
Yeah.
And follow everybody. Kat, you're just a great host.
that's the only. No, I actually don't know. You guys say that, but I'll take it. I learned to take compliments, but
Sorry, Heidi.
take care.
Sorry, Heidi. Did I cut you off?
No, not at all. No, I'm good.
Yeah, we would not want to be the group that cuts the women off. No, that would be bad form. But no, I think Heidi, your mic is really soft for some reason. I would really love to hear you talk, more. Like definitely, I enjoy your thoughts. You're a great trader. I don't think like people understand that you post up great charts and you have great thoughts. I would like to tell people more about you if I can.
I appreciate it, Kat. Thank you. Sorry, maybe I'm just a low speaker.
Gotcha. Yeah, we got to upgrade your speaker somehow, maybe.
Yeah. All
right, guys. You guys have a great weekend. Thank you for joining.
Thanks,
all right,
everyone.
bye everyone. It was fun.
Yep.
Thanks.
Yep.
Later.
Yep. Bye.